The Nasdaq 100 hit our upper end targets on Monday after price followed through from the strong close last Friday. In the last video, I mentioned 12,240 to 50 and 12,420 as upside targets. Now with price closing near the highs on Friday, price hit our upside target on Monday before pulling back off this level. Monday's rally was almost single-handedly driven by Apple after Goldman Sachs rated it a buy. This is not a healthy sign if only one or two big names are driving the whole index. You really want to see participation from as many names and sectors as possible for breakouts to occur and persist. Tuesday was a momentum changer, with Powell influencing the trading activity after he suggested that interest rates are likely to be higher than previously anticipated. Yep, there's Powell garnishing his dish with a few red candles. All of a sudden, yields jumped. You can see how the 2-year yield reacted, topping 5% for the first time since 2007. And the terminal rate, of where traders believe rates will peak out, also rose. You can see that from this table. That's around 5.6, being the new peak rate expected in the US. Fed Chair Powell hasn't been the only one talking up rates this week. There has been more rate hike talk from the ECB, with officials hinting more rate hikes are required to bring down inflation. Stocks as a result sold off on Tuesday, as higher rates for longer is bad news for risk assets and recession talk will pick up again. Wednesday we had the US job openings, which fell to 10.8 million in January, but came in above analyst estimates of 10.5 million, meaning the labor market is a bit tighter than anticipated, increasing expectations for 50 basis point Fed rate hike in March. Despite this, price managed to hold the 40-day moving average at 12,100. Thursday saw the Nasdaq 100 make a spectacular reversal, with the initial rally driven by a drop in yields. But look at what happened around 3 p.m. London time. Both the Nasdaq 100 and the 2-year yield dropped. This was no longer about yields, but rather the banking sector bringing the rest of the market down, first with crypto bank Silvergate announcing liquidation, and then regional banks in the US getting hit, particularly Silicon Valley Bank, which saw its shares plummet. All of a sudden, price is within a whisker from the 200-day moving average, and with the inverse hammer candle on Thursday, that led to further downside on Friday, with the Nasdaq 100 sandwiched between the 40-day and the 200-day in a volatile session. Silicon Valley Bank was shut down today by regulators, and that will keep traders on edge, with banking stocks likely to continue to be hit. Here's a chart of Credit Suisse credit default swaps jumping as banking fears spread. Credit default swaps are designed to protect investors that hold the bonds of the company. They're like insurance, so that if the company went bust, they would be compensated for holding those bonds. You can see the price of that insurance against Credit Suisse bonds shot up this week. On the flip side, the worries around the banking sector are likely to temper rate hike talk, especially 50 basis points, so that will keep yields down for the time being. In terms of levels to watch into the next week, the 200-day is key support at 11,894. Price remains above it, and closing the week above it will keep further sellers entering. The 40-day around 12,083, which was support for the early part of the week, will now act as key resistance with price below it. Below the 200-day, and we test the key trend line once again around 11,768. Further support is at 11,680. With the way price is trading, it is likely that we get another retest of this key trend line, which price broke out of at the start of Feb. We've already had one backtest of this trend, and it held last week. We could get another today or early part of next week. When looking at the bigger picture, taking the weekly chart, you can see price remains above this trend line, which price broke out of and remains above. Despite all the noise in the market, it is important to trade what is in front of you, and that is price. As long as price remains above this trend, this continues to remain a backtest of a breakout. Only if price breaks below and stays below would this represent a key momentum change. Volatility is likely to remain high next week, therefore adjust your trade size accordingly. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.